to Kate Moody, because it is, again, lives versus livelihoods as we watch this second wave, if you will, of COVID. Now, the French government saying it's got an extra billion in its pocket to help businesses that are affected.
In its pocket or behind the cushions of the couch, somewhere it's going to be finding an extra billion euros, Francois. It has already spent 470 billion euros on its emergency support programs so far this year. More aid now coming for business owners, workers and households as those new restrictions come into effect. Speaking alongside the Prime Minister this afternoon, Finance Minister Bruno Le Maire said that everything that could be done would be. Ellen Gainsford reports.
With strict new measures on their way to slow the spread of the pandemic in France, the French government is keen to assure business owners they'll get the support they need.
Depuis le début de cette crise, nous avons été aux côtés des entrepreneurs comme des salariés touchés par la crise économique et par les règles de sécurité sanitaire. Et nous continuerons à l'être après l'annonce de ce couvre-feu.
Top of the list of new measures, the state-sponsored furlough program is to be extended. Workers in the worst affected industries will continue to receive 84% of their wages, or 100% if they're on minimum wage. The Solidarity Fund for businesses will be beefed up and made more accessible. Businesses in any sector with fewer than 50 employees who've lost more than 50% in revenues in comparison to the same period in 2019 will get up to €1,500, while those in the hardest hit areas, including hotels and restaurants, can apply for up to €10,000 a month from the Solidarity Fund if they've lost half of their revenues. Social charges are being dropped for some businesses ordered to close during the curfew. The state-backed loan scheme is being extended for 6 more months. And direct loans from the government will be made available to the companies that are struggling the most until next June. It's a €1 billion package the French government hopes will keep businesses afloat for the duration of the curfew period and stave off a wave of bankruptcies and layoffs.
The number of Americans seeking unemployment benefits rose sharply last week to its highest level since mid-August. The Department of Labor recorded just under 900,000 new applications. That's 50,000 more than the previous week. More than 370,000 additional people applied for support under the separate pandemic support program, which covers the self-employed and gig economy workers. Data suggests that many more people are dropping out of the workforce. That suggests that real unemployment will remain elevated for the medium to long term. Analysts say the labor market's summer recovery is fading faster than expected as employers hold out for further financial aid from the government. Congress, though, remains deadlocked over another stimulus program to help businesses and households. Let's check in on the day's trading action now. Wall Street's trending lower for the third session in a row as that stimulus impasse worries investors. The Nasdaq down over 1 percentage point this hour. The S&P 500 about 0.75%. Morgan Stanley shares are trading nearly 2% higher after the investment bank beat expectations with a 25% increase in third quarter profits compared to the same period last year. As you can see there, the major European indices closed sharply lower, losses of between 2 and nearly 3%. London's FTSE 100 a little bit less there. Travel stocks slipped as more European countries tightened their restrictions on movement. The hotel chain Accor dropped nearly 5% here in Paris. Well, airlines have already been dealing with a massive slump in passenger numbers. The low-cost airline Ryanair is now cutting its winter schedule even further. The carrier plans to run just 40% of its flights, down from 60% previously announced. It says that recent changes to travel rules have led to materially weaker bookings for the months of November and December. Ryanair is also closing its bases in Cork, Shannon and Toulouse for the coming months. Shares of the record company of the Korean pop sensations BTS have more than doubled in value on their first day of trading. Big Hit Entertainment is now worth almost €6.5 billion after its stock market debut. The launch makes the CEO an instant billionaire, and each of the band members, who were given almost 70,000 shares each ahead of the listing, multi-millionaires. Demand for shares was driven by BTS's fan base as they competed for that new must-have collector's item. Francois, investors seemingly not too concerned that those superstars are actually, because of their age, going to have to take a break from music fairly soon for their mandatory military service period.
Mandatory, like Elvis Presley.
Absolutely.
All right.
Just as popular. Different hairstyle.
Many thanks, Kate Moody.